What's up guys, this is Chris. If you're new to the channel, welcome. We talk all about investing. I've been getting a lot of requests about cheap stocks and what stocks can I buy under $5? What can I buy, with a limited amount of money in my Robinhood account? And this is the answer for you guys. So the stock we're going to talk about here today is FINV, otherwise known as Finvolution. And besides the awesome, interesting name that is, at least I think it is, you have a company here that is a $1 billion fintech company out of China. So what Finvolution is, it's essentially a online lending platform, very similar to some that you have seen in the United States as well. And this is very similar to a company that I've owned in the past called Futu, F-U-T-U. We have had tremendous gains in the channel since then. From September, and this month alone, that stock has gone huge, like over 150% or so. And with this company, I think you're getting a huge value out of it as well, like I saw in Futu. Specifically in the fintech space, I think there is a lot of room to grow as that economy and many others in the Asia region become more developed. People have a lot more money, they're going to need a lot more capital, and especially in these times where interest rates are dirt low and in some places negative, right? You're going to have a lot of people that are very interested in buying and borrowing to do all sorts of things like buy houses, start businesses, and all that good stuff. So as a company over the years, Finvolution has made tremendous progress with their business. So at first they had a very broad lending business. They lended to pretty much everyone. Obviously that's not a really good idea because some people are going to default on their loans like crazy. So they've really transitioned and really improved on their business, where they're focused super heavily now on the highest quality borrowers, and that's with their credit system. So they're now able to boast a really low delinquency rate of less than 0.5%, and they're also focusing now on providing loans that are backed by institutions. So before it was with individuals, wealthy individuals that wanted to put up their money and get some interest from that. Well, some people again can be, not that reliable and shady, and there probably were a lot of problems with that as well. So their business model has really been shored up here, and it's 100% institution backed. So they're kind of like a middleman platform here, which is great. And so for them, the big thing here is being able to continue to attract more customers who can take more loans. And the higher quality customer with good credit is probably someone that's going to get a repeat loan, and 90% of their volume is actually repeat. So I think the key thing for them going forward is going to be that customer acquisition, because they've already shown once they get the customer or the borrower, they're able to retain them very strongly. I think that definitely as the economy grows and transitions, that we said, out of this crisis, they're going to have more volume coming in, and it's going to be more business, more fees that they're going to be able to take in. All right guys, so that's a really great model and all, but I'm going to show you really why it seems really bullish, almost too good to be true. We'll see how that goes, but if you look at the balance sheet, right, this company has zero long-term debt, and the assets to liabilities is basically 2-to-1. So they have a really great balance sheet here, one of the biggest and best balance sheets I've seen. Certainly for a company of this size and this stock price. There's a ton of cash on this balance sheet and a ton of cash flow, because there's 50 cents per share of this stock price that's basically for free. It's basically just cash. So it just comes with 50 cents per share in cash, which is a remarkable thing for a stock that is only like $3.50 or under that as of this recording. On top of that, you have this company paying an annual dividend of almost 3.5% based on last year's number. It's a very interesting thing. They only pay it out, one time. It's a one-time 3.5% payment. I believe they pay generally in April. So if you wanted to get in on that, you'd have to have the stock before that date. But wait guys, because there's even more to the story here with this stock. So on top of all that, they're doing share purchases. So the company is buying back its own shares by the tens of millions. Most recently, they did an update on their $60 million share repurchase. And on a company that is only $1 billion in size, that is like 6% of the whole company, if I'm not mistaken, which is a very significant amount. And they've been doing this consistently year after year after year. So they're really intent on giving you back a lot of value in this stock. So this co-founder of the company, by the way, owns over 416 million shares of this company, and that amounts to a 30% ownership stake, and he's still increasing it every year. Most recently he's bought, I think, 400,000 shares, 500,000 shares here and there. In the grand scheme of things, that might sound like a small number, but clearly he still thinks it's undervalued if he's continuing to buy shares at this rate. So the co-founder, Mr. Gu, commented, "Despite a challenging start to the year, a large portion of uncertainties appear to be behind us." Okay, he goes on to say that, the credit risk that the company has managed to control and really refine and improve upon with their shift in the business model to institutional funding partners has been a huge improvement and opportunity for the company. And he continues to believe that their technology-driven focus will enable the company to better navigate market dynamics, capture opportunities, and achieve sustainable growth in the long term. "I also believe the current share price undervalues the potential of the company and serves as a highly attractive investment opportunity." But even if you disregarded everything I just said about, the business model and also the fact that this is a growing company, it's in an interesting space, fintech and China, I think that you just have to look at the valuation here on a PE basis, and the price to earnings is 3.5 in this company. And I'm not sure why this company is estimated to do worse in the coming year and have a forward PE of 4, which is a little bit higher. But, I think that's really off the mark if, loans are probably going to definitely pick up in the coming year, and the economy tends to pick up after a recession. But, forget all of that. A PE of 3 or 4 for a fintech company, or even if you want to call it just a bank, is ridiculously low. It's shocking, really, when you see other companies that are trading in this space. Even like certain banks trade at PEs of 10 to 15 in most years, and in some overvalued times it might be 15 to 20. You want to look at other fintechs, you look at Futu, which is a Chinese fintech, and it's trading way higher than that. So either I'm somehow totally off the mark here, and maybe it is a fraud or something like that, but if I'm not, I think this is one of the most really undervalued and overlooked stocks I have ever seen at this price point in the history that I've been in the stock market. So I am definitely going to be buying this stock. And I'm actually going to put out a video very shortly on 3 stocks that I think are really interesting at this price point, under $5 or thereabouts, and the companies that are being undervalued and overlooked, and in my opinion are actually legit type of penny stocks or small cap stocks, or whatever you want to call it. Cheap stocks that you can buy and not really worry about if it's a pump and dump or it's going to crash, and if it's just hocus pocus or thin air. These are actually pretty legit companies, and I will be adding all 3 of them into a specific portfolio. We're going to call it the penny stock portfolio or something like that, and you're going to put $2,000 in it to start with. And we're going to see and track the progress of these 3 penny stocks and see what it's going to do. But stay tuned for that one, and let me know in the comments down below if you are interested in Finvolution, FNIV, and your thoughts on the matter. Until next time, my friends, stay well, and remember to invest responsibly.